Welcome back to Yahoo Finance Live this Monday, December 6th. I'm Emily McCormick in for Shauna Smith, here with Adam Shapiro, and we have a market panel here with us now to take us to the closing bell and beyond for this session. Bill Baruch is Blue Line Futures President, and Chris Retzler is Needham's Small Cap Growth Fund Portfolio Manager. Bill, I want to turn to you now because we have been seeing in the Treasury markets, at least, a jump in yields on the long end of the Treasury yield during today's session. But prior to that, we had been seeing spreads narrowing. What do you think the yield curve is telling investors right now?
Yeah, we had a little steepening today, and that's healthy for the market, healthy, shows a healthy economy. But yeah, you said it. Last week, the spread between the 5 and the 30-year went to the lowest since early March of 2020, really since when the news on Saudi Arabia and Russia conflict within OPEC and that cratered oil prices. So, that says a lot. I mean, it really says that the Fed could be speeding up at their tightening cycle into slowing growth, and that is a policy mistake. That's what the bond market was telling us last week. So I think when we had a bond breakout, on the prices of the bonds really ripped higher, was more about that rather than the Omicron fears.
I want to follow up with you, though, on when we talk about bonds, Bill, because, with the 10-year now back at about 1.4, it still hasn't broken above 2. But there's a whole lot of nasty coming our way as investors. I'm not talking about the fight over the debt ceiling. I'm talking about the fact that we're not going to have diplomats going to the Chinese Winter Olympics, that we've got 100,000 Russian troops on the border with Ukraine. As an investor, do I need to pay attention to those diplomatic issues right now? And could that be part of what we're witnessing, with these flattening yield curves?
Yeah, absolutely. I think there's several tailwinds that are within the bond market right now, and like you mentioned it, there's the conflict building on Eastern Europe and Russia, and we could hear some news coming out of the White House on Russia. I've seen that Putin has been commenting over the last couple sessions, going back to last week, more than typical. It will be interesting to see how that plays out. I mean, there's other news too that may not be so much affecting the bond market, but within Iran, I mean, look at what crude oil did today, and I think some part of that is the fact that Iran nuclear deal is slowly deteriorating. Yeah, there's a lot to pay attention to in the geopolitical landscape because it's going to have an impact on bonds or other assets. And I do think really going into next year after the Olympics, I'd really keep a close pulse on China and see what they do in Taiwan after the Olympics, because that could open the door. I think they're very quiet right now, not trying to rock the boat before the Olympics.
And Bill, of course, Chris was just speaking about pricing power. What do you expect for corporate earnings going forward? I know we're in a little bit of a lull here as we get into fourth quarter earnings season next year. But what are your expectations going forward for company profits?
Well, you can see here that everything's really priced to perfection, and if they sort of adjust against some of the guidance, a stock can get hammered. I mean, look what happened to Salesforce, and I like Salesforce a lot. I think it's a terrific company, and I think we're going to see that stock trade back above 300 in the coming months. I've used that as a buying opportunity. So I think more to answer your question, more as an investor, you don't necessarily know what stock is going to, what company is going to adjust against guidance or might miss a little bit, but you want to look farther out and understand, fundamentally how you feel and what you think about that company and stick to your game plan. Because I've used that as a buying opportunity in Salesforce, same way I used it as a buying opportunity about a year ago in Salesforce when it sold off after the Slack acquisition. So I think, going through these waters and sort of in these times, just having your game plan is really what matters more than anything. But I do think that corporate profits overall, I mean, we're going to see those continue to build up, but some sectors could see that tightening, and really it depends how they pass on some costs to their customers. You've seen some of the grocery stores, they've done really well. Look at Albertsons making highs, Kroger's done really well, but then you see other companies that are eating some of those costs that the investors haven't received that too well, and those stocks are taking a hit in the medium term.